Welcome to Vested Interest. This is Shane back again for another stock pick of the day. It is May 31st. We are going to take a look at Advance Auto Parts. This is a retailer that does what it says, sells auto parts. Let's jump right in. If you want to know more about them, check them out. Shop.advanceautoparts.com. That is their homepage where I pulled this information from. Narrow down your search for Advance Auto Parts stores near you by selecting from the list of states above. It listed out all 50 states, so I didn't put that in here, but you can find them in every state in the continental United States. At Advance Auto Parts Inc., customer service is driven by team members who are passionate about delivering excellent in everything they do. This dedication is enhanced by our sophisticated network of distribution centers and advanced automated inventory and delivery management technology. Advance Auto Parts always delivers the right products to the right place at the right time. Advance Auto Parts Inc. is a leading automotive aftermarket parts provider that serves both professional installers and do-it-yourself customers. As of April 23rd, 2022, Advance operated 4,687 stores and 311 Worldpac branches, primarily within the United States, with additional locations in Canada, Puerto Rico, and the U.S. Virgin Islands. The company also served 1,318 independently owned CarQuest branded stores across these locations. In addition to Mexico and various Caribbean islands, Advance employs approximately 68,000 team members. You can read the rest there. Basically, they, like I said, have an online presence where you can order parts for your car. You enter in the vehicle, type of vehicle it is, enter a location if you want to go pick it up yourself, or they'll send it right to your house, put your VIN in, and they'll send you what the part for that particular vehicle is. So that is what their bread and butter is. They've been around for a long time. I have shopped there in the past. Excuse me. I will say, as cars have and vehicles in general have become more computerized, I do less and less work on them myself. So it's a lot more difficult to do than it used to be back whenever we were driving, cars from the 70s and 80s. I was born in 79, so I'm dating myself a little bit here. So my first car was a vehicle from the 80s, and it was pretty easy to work on. Pop the hood, change the oil, change a carburetor. Water pumps, that sort of thing. We did most of that stuff ourselves whenever I was growing up, but I know that less and less people are doing that type of maintenance themselves and taking it in to a dealership. So that's Advance Auto Parts. Let's jump in and see why we're taking a look at them today. Well, we are taking a look at them because they had a massive down day. We are talking about Advance Auto Parts, ticker AAP. This is a retailer out of the consumer discretionary sector, and they were down 35%, a little over 35%. That is a huge drop, right? Massive drop on the day. Lost $39 off of their price per share here. Just an epic downturn right there. So I thought we'd take a look at them. All right, 52-week range as low as $72.60, as high as $212.25, right up against their 52-week low. And if they drop any more, they'll be setting a new 52-week low. So not sure exactly. Well, they had an earnings date. That's what happened. So must have been bad on the earnings date. Well, let's keep running through here. Average volume 1.3. Today was 21. People said, I'm out, right? I mean, this was, from 1.3 million to 21 million. I mean, people basically just said, dump the shares. If I got any, I want to sell. Market cap of 4.332 billion. A beta of 1.12, more volatile than the overall market. I don't know how much of that has to do with today's drop, but probably some of it. PE, price to earnings, is $8.81 per share. Earnings per share is $8. That's actually pretty good. Pretty low PE, and pretty decent earnings per share, $8.27 per share. Earnings date was today, so there had to be some bad news here, right? I would look at that, find out exactly what's going on here, because that's just, like I said, 35% on the day. Massive drop. Ex-dividend date, the last one, forward dividend, $6. They are a quarterly payer. We'll see that here in a minute, what they pay out per share per quarter. High dividend yield, 5.35. I would be worried on this one that this might be a dividend yield trap. Ex-dividend date was April 13th. They have paid out already April 28th, so you would be in line for the next dividend if you were to buy them today, I believe. It doesn't say when their next ex-dividend date, so it hasn't passed most likely. And same thing, we're going to run through it just like we do any other stock. We're going to go into the statistics. Down here, look at dividend yield theory. Under dividends and splits, 5-year average dividend yield is 1.14. It is way above that, 5.35. So according to dividend yield theory, this would be extremely undervalued. I don't know that I would use that for this one. If they had a bad revenue beat, and we look at free cash flow in a minute, You want growing free cash flow, right? So let's take a look at that down here. Let's one other thing I like to look at, payout ratio 72.55%. Right, so it is, I like 75% or lower. So this is under my payout ratio, but I am a little concerned that it is right up against it. And we'll see here in a minute their recent dividend growth, which is why I'm a little concerned with the payout ratio. 2019, they had 395 million. 2020, it was 701 million. 2021, 822 million. So you can see nice steady growth from 2019 to 2021. Big drop off from 2021 to 2022, 296 million. And then whatever their issue was today, that may be why. I mean, if they're showing like maybe negative revenue or something like that, it may be part of the issue here. But big drop from 21 to 2022. If you look at 2019 to 2022, it's not growing, right? It was growing these 3 years, but a big drop from down there. So free cash flow is definitely dropping, or a big drop anyway. So not a good sign there. Yahoo Finance has a target estimate of $142.03. So they see it potentially doubling up from here, right? Take that with a grain of salt. They are repurchasing their own stock. All right, all this is brought to you by Yahoo Finance. I'm not affiliated, just one of the sites I like to go to. I always recommend you back check the information from more than one site. So another one that I like is stockanalysis.com, and they have 17 stock analysts that have taken a look at this, and they call it a consensus buy, though it is right there on the edge of a hold. Their estimates are just way out there compared to where it's at. Low estimate of $115. If it was to come back up to their lowest estimate, that would be a 57.77% increase in the stock price. Average estimate $157.82. That would be a 116.52% increase in the stock price. And if it happened to hit their high of a new 52-week high, $236, that would be a 223.78% increase. Again, I would like to see them maybe relook at this with this recent revenue reported and see if they would adjust this at all. This might be something I come back to in a week or two and see if these 17 stock analysts retake a look at this and adjust this any. Return on equity, this is another one. If you go under statistics here in stockanalysis.com, go under statistics. I like to look at return on equity and return on invested capital. I like 10% or greater on each, or in line with their industry average. So you'd want to look at other companies like Advanced Auto Parts to see what theirs is. But looking here, return on equity is 18.10. That's nice. That's above the 10% that we want, almost double. Return on invested capital is a little low, but not terribly so, 8.2%, just under the 10% that we look for, or I look for. So not terrible numbers, right? Overall, anyway. And then we look at the dividend payout, right? So like I said, they are a quarterly payer. They're currently paying $1.50 per share, right? As we saw, the ex-dividend date there was April 13th. They paid out on April 28th, so they should have another one coming up in June, right? April, March, well, let's look. June, September, December, March, June, September, December, March, June, September, December. It looks like they paid out a little early here in April, so that maybe that's I don't know if that's a special dividend or they're normal. It's in line with the 150. They may have just paid it out early instead of paying in May. It looks like they typically pay in March, but they paid out early. All right, but here's what I was talking about. Dividend growth, 33.33%. That's very high for a payout ratio of 72.55. And let's look at why it's high. If I go back to 2020, they were at 25 cents. Then they jumped up to $1 in 2021, then $1.50 in 2022, and they've been there ever since. So this one has raised up extremely fast. That's why it has a 33.33% dividend growth. But is that sustainable? I don't know that is, right? That's a huge drop. 4 times and then 50% increase here. So I don't like whenever stocks do that. I mean, to me, it feels like a yield trap because they're saying, hey, look at this great high dividend that we got and fast dividend growth. Jump in, buy me for my dividend. But can they continue to do that? I would be concerned on that. Again, 33.33% growth is nice if this payout ratio was, let's say, in the 40s. Then it would look a whole lot better. They'd still have some runway to go. I would not think that this is sustainable. It's just me. Overall, I am a little concerned that this may be a dividend yield trap. I don't like the huge drop down. I don't like the huge drop in free cash flow. That's a red flag for me, a big one really. I don't like that they've really juiced this dividend up over the last couple of years. That's a little bit of a red flag. It's right up against the 75% payout ratio that I like. Like I said, if this was back in the 40s, I'd be more comfortable. I don't know, folks. This is my investment criteria. You can stop this and look through it if you want. For those of you who stopped by previous slides, you're well aware of it, but go ahead and read through it if you like. That is Advanced Auto Parts. I don't know, guys, what to think on this one. Huge drop on the day, down against their 52-week low, but man, I'm just a little concerned that is this company, let me ask this. Do you think the company would be here in, let's say, 15 years? Do you think people are still going to be, especially if we continue this trend as moving to electric vehicles where there's less parts to break, away from gas powered vehicles where there's more parts that break and you can do yourself? I mean, I don't know how many people are going to be doing their own maintenance on electric cars. That's just me. I could realistically see Advanced Auto Parts not being around in 15, 20, 25 years. So me personally, it's not one that I like. I have shopped there in the past, like I said, back in the 80s and 90s. When I got my first car in the early 90s, mid 90s there, people were still working on their cars. But over the last 10, 15, 20, 25 years, less and less people are. And I see less and less auto parts stores. So one I'm avoiding personally, but let me know what you think down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, trying to build a community of like-minded dividend growth investors so we can share our experiences, stocks we're watching, stocks we're avoiding, all our information and knowledge so that we can be better investors, right? Everyone has something to offer. You know something that I don't. I may know something that you don't, and we can help each other along the way. Right, you're not going to benefit from my investments, but you can benefit from my knowledge, and I can do the same from you. So that is what it's all about here. Hit that subscribe button, hit that notification bell so you're notified whenever we put out any new content. Drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions and or opinions, suggestions for future topics. If you have a stock you'd like me to cover, a company you'd like me to cover in the Stock Pick of the Day series, put it down below, and I'll work it into the rotation. Well, I really appreciate you stopping by. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount of money you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.